Have you ever looked at a super volatile stock like Plug Power and just wondered, how in the world do traders even try to predict what it's going to do next? Well, today, we're going to pull back the curtain. We're breaking down one specific trader's analysis, piece by piece, to see exactly how they read the charts to try and get an edge. Let's get right into it.
So to really get why this stock is on every trader's radar, you got to look at what it did in 2025. It went on an absolutely insane 560% run. Traders call that a squeeze, just a super fast, dramatic price jump. And, it's that kind of explosive potential that gets technical traders really excited about what might happen next.
And that really brings us to the big question from the analysis we're looking at. After a rocket ship ride like that, the stock pulled back. So naturally, the question on everyone's mind is, what's next for 2026? We're going to walk through this one analyst roadmap and see exactly how they're planning to navigate all this uncertainty.
Okay, so here's our game plan. First, we'll look at the stock's wild past and this key idea of a shakeout. Then we'll get into the trader's toolbox, the specific things they look at. After that, we'll see how they find patterns in the price, lay out the case for the bulls versus the bears, and finally, we'll put it all together with the key price levels to watch.
All right, let's kick things off with that volatility. The trader we're following argues that before you get a huge move up, a squeeze, you almost always see this period of intense drama. They call it a shakeout.
So what exactly is a shakeout? Well, according to this analyst, it's not random at all. It's a deliberate maneuver. Big market players create some drama, push the price down just enough to trigger all those automatic sell orders, the stop losses that people set up as a safety net. And once those nervous sellers are shaken out of their positions, the runway is clear for the price to just take off. As a trader puts it, no drama, no squeeze.
Okay, so we get the shakeout theory, but how does a trader actually spot these kinds of opportunities on a chart? The analyst we're studying really leans on two main tools: open gaps and technical indicators. Let's break those down. First up, let's talk about gaps. An open gap is pretty much what it sounds like. Just imagine a stock closes the day at $2, and the next morning it opens at $3. That $1 space on the chart where literally no trading happened, that's your gap. Now, why should you care about this? This is crucial. This trader believes that the market just hates leaving a vacuum. They argue that one of the main reasons for a big price move, a squeeze, is to go back and close or fill those gaps. They're like magnets, just pulling the price toward them over time. And this isn't just some abstract idea. They've got a treasure map laid out. This shows the next 3 open gaps that are sitting above Plug Power's current price. So these levels, $5.88, $8.08, and $10.56, these become the potential long-term targets if a squeeze actually happens. The second big tool in the kit is the RSI, which stands for Relative Strength Index. The simplest way to think about it is like a momentum gauge. It's trying to tell you if a stock is being sold off way too much, making it oversold, or if it's being bought up way too fast, making it overbought. And here's where the trader's thinking gets really interesting. They aren't looking for strength. They're actually looking for weakness. They literally say they want to see more pain on the RSI. Why? Because funny enough, that's often the signal that comes right before a huge price surge. It's like the quiet before the storm. So now that we've seen the individual tools, let's zoom out a bit. Traders don't just stare at single data points. They're looking for the big picture, for broad patterns that tell a story. And for Plug Power, the most important pattern is something called a trend channel. The analyst points to what they call a super old bullish uptrend channel. The best way to picture it is like a river. The stock price is flowing inside this river, between two banks. For years and years, whenever the price has drifted down to that lower bank, it has found support and bounced right back up. For this trader, this channel is the foundation of their entire bullish argument.
All right, we've got the tools, we've got the main pattern. Now let's see how the trader uses all this to map out a strategy. It really all boils down to an if-then game with really clear lines in the sand for both the bulls and the bears.
Okay, so here's the core of it. For the bullish story to even begin, the price has to break above $2.26. Think of that as the ceiling. But if the price breaks below $1.60, things turn bearish fast. That would mean the floor, that old trend channel, has finally broken. So you can see pretty much everything hinges on these two numbers. But what if that bearish trigger, that 160 level, gets hit? Well, the analyst has a plan for that too. They've identified what they see as the absolute bottom, an ultimate shakeout level, down at 74 cents. They believe that if it gets that low, you'd see a massive bounce.
Now back on the bullish side, there's one last major hurdle to clear before we can even talk about those big open gaps way up high. It's a level that this analyst considers the real turning point, a true make-it-or-break-it moment.
And that magic number is $4.22. The trader sees this as the final wall to break down. If Plug Power can get above this price and hold it, then in their mind, the path is finally clear for a major run toward those higher targets.
Phew! Okay, we have covered a lot of numbers and a lot of theories. So let's put all these puzzle pieces together and look at the trader's complete strategic map all in one place. Here it is, the whole shebang. A breakdown below 160 means the bullish case is in serious trouble. A breakout above 226 is the first green light. Then there's a short-term target at 312. But the real test, the big boss battle, is clearing 422. If that happens, it could unlock the run towards 588 and even higher.
So, what can we all take away from this deep dive? It's pretty clear that technical traders aren't just guessing. They're basically pattern hunters, right? They're looking for stuff like channels and gaps. They use these specific price levels as triggers to take action. And they use indicators like the RSI to try and read the room. The whole strategy is this logical, if this happens, then I'll do that kind of plan. But, and this is a huge but that the analyst points out too, real-world news can always come in and just blow up the whole chart. And that really leads us to our final big picture question. The analyst themselves warns that the company is issuing more shares, what's called stock dilution, and that could mess with these technical patterns. So it leaves us with this really fascinating question to think about. When the neat, clean story that a chart is telling you clashes with the messy reality of a company's business decisions, which story is going to win?